Something just happened in the silver market that hasn't occurred in over 4 decades. And if you're not paying attention right now, you're about to miss the biggest wealth transfer opportunity of this generation. Silver just hit 66.52 per ounce. Let me say that again, because most people don't understand what this means. Silver touched an all-time record high of 66.52. This isn't just another price move. This is the red line, the point of no return. And what's happening behind the scenes is far more explosive than what you're seeing on the charts. See, while everyone's been distracted by Bitcoin and tech stocks, something extraordinary has been building in the silver market. A perfect storm of forces that's been decades in the making. And it just reached critical mass. Let me take you back to 1980 for a moment. That's the last time silver went parabolic. The Hunt brothers tried to corner the market, silver shot to $50, and then it all came crashing down. For the next 41 years, silver couldn't break that level. It tried in 2011, got close at $40, but failed. That $50 level became psychological cement, an impenetrable ceiling that told traders, this is as high as silver goes. But here's what changed. On December 17th, 2025, silver didn't just break $50. It shattered through it like it was tissue paper and kept climbing. $55, $60, $65, and then $66.52. In a single session, silver erased 4 decades of resistance and entered completely uncharted territory. Now, I need you to understand something critical. When an asset breaks a 40-year resistance level, it's not just a technical event. It's a fundamental shift in market psychology. It's the market telling you that everything you thought you knew about this asset is wrong. The old rules don't apply anymore. We're in a new paradigm. And the data behind this move is absolutely staggering. Silver is up 115% in 2025 alone. Let me put that in perspective. If you put $10,000 into silver at the start of this year, you're sitting on $21,500 right now. That's more than doubling your money in 12 months. But here's the thing that should terrify anyone not positioned in this market. This isn't the top. This is just the beginning. Let me show you why. The catalyst that pushed silver through this red line wasn't some random event. It was the December jobs report. The U.S. unemployment rate ticked up unexpectedly. Nothing dramatic, just a small uptick. But the market's reaction was violent. Why? Because it confirmed what smart money has known for months. The economy is cracking. Recession fears are no longer theoretical. They're here. And when recession fears hit, something predictable happens. Money floods into safe havens. But here's where it gets interesting. Gold went up about 1% that day. Solid move. But silver? Silver exploded 2.8% in a single session. That's nearly triple gold's move. This tells you something profound about what's really happening. Silver isn't just moving as a safe haven. It's moving as an industrial metal in a supply crisis. See, silver has this unique dual nature. It's both a monetary metal like gold and an industrial commodity that's absolutely critical for modern technology. Solar panels, electric vehicles, 5G infrastructure, medical devices, electronics. All of them require silver, and they require a lot of it. Here's the problem. Global silver production peaked years ago. We're mining less silver today than we were a decade ago. Meanwhile, industrial demand has exploded. The solar industry alone is consuming record amounts of silver. Every solar panel requires about 20 grams of silver. And governments around the world are mandating solar installations at unprecedented rates. China, Europe, the United States. Everyone's racing to green energy, and they all need silver to do it. But it gets worse. The above-ground stockpiles of silver are vanishing. The COMEX, which is the major exchange where silver futures trade, has seen its registered silver inventories drop by over 60% in the past 3 years. Registered inventory is the silver that's actually available for delivery, and it's disappearing at an alarming rate. Let me paint you a picture of what's happening on the ground. There's a refinery in Switzerland that processes a significant portion of the world's silver. They're running 24/7 operations and still can't keep up with demand. They're telling customers there's a 6-month wait for delivery. 6 months for an industrial metal that manufacturers need right now. And here's where the story gets really interesting. Remember how I mentioned the COMEX? Well, there's something happening there that most people don't understand. The COMEX operates on a fractional reserve system, meaning there are far more paper claims on silver than there is actual physical silver in the vaults. Some estimates put the ratio at 100 to 1. For every ounce of physical silver, there are 100 paper ounces being traded. This works fine as long as everyone's happy trading paper, but what happens when people start demanding physical delivery? That's when the system breaks, and we're starting to see the early signs of that breakdown. Large institutional buyers are increasingly taking physical delivery instead of rolling their contracts. They're pulling silver out of the COMEX system, and every ounce that leaves makes the remaining paper claims more precarious. Now, let me tell you about what's happening in the central bank world, because this is where things get truly fascinating. Central banks have been accumulating gold at record pace. Everyone knows that. But what most people don't know is that several central banks are also quietly accumulating silver. Not in the same quantities as gold, but they're buying. Why would central banks who traditionally only hold gold start buying silver? Because they see what's coming. They understand that in a world where the dollar's dominance is being questioned, where BRICS nations are creating alternative payment systems, where de-dollarization is accelerating, precious metals become the ultimate form of money. And silver, being far more affordable than gold, becomes accessible to a much broader population. Think about it this way. Gold is trading around $2,700 per ounce right now. That's out of reach for most people. But silver at 66, that's accessible. A regular person can buy an ounce of silver. They can accumulate it over time. And if we're heading into a monetary reset, which many experts believe we are, silver becomes the people's money, the asset that allows ordinary citizens to preserve wealth when fiat currencies fail. And speaking of wealth preservation, let me take a quick aside here because this is important. If you're sitting on $100,000 or more in retirement accounts, you need to understand how gold IRAs work. I put together a comprehensive guide that covers exactly how to get physical precious metals into your retirement account without triggering tax penalties. It's in the description below. Worth checking out if you're concerned about protecting your retirement savings in this environment. All right, back to what's happening in the silver market right now, because the technical picture is absolutely screaming. When silver broke through $50, it triggered a massive wave of short covering. See, there were hedge funds and commercial traders who had been betting against silver for years. They were short at $25, short at $30, short at $40. They kept adding to their positions because they believed silver would never break $50. Well, they were catastrophically wrong. And when silver blew through $50, those shorts had to cover. They had to buy back their positions at a loss. And that buying pressure added fuel to the rally. It created a feedback loop. Higher prices forced more short covering, which pushed prices even higher, which forced even more short covering. This is what's called a short squeeze. And in the silver market, with its relatively small size compared to other commodities, a short squeeze can be absolutely explosive. The entire global silver market is worth maybe 1.5 trillion. That's tiny compared to gold at 15 trillion, or the stock market at 50 trillion. When big money starts flowing into silver, it moves the price dramatically, and big money is flowing in. The silver ETFs have seen record inflows in recent months. Institutional investors are piling in. But here's what's really interesting. Retail investors, regular people, are buying physical silver at unprecedented rates. Coin dealers are reporting they can't keep inventory. Premiums on physical silver coins and bars have spiked. People are paying $5, $6, even $7 over spot price just to get their hands on physical metal. This tells you something crucial. There's a disconnect between the paper price and the physical price. The paper price, what you see on the charts, is $66. But if you actually want to buy physical silver, you're paying $72 or $73. That spread is a warning sign. It's telling you that physical silver is becoming scarce. And when physical becomes scarce while paper claims remain abundant, that's when the system breaks. Let me tell you a story that illustrates this perfectly. In 2008, during the financial crisis, something similar happened. The paper price of silver dropped to $9 per ounce. But if you tried to buy physical silver, dealers were charging $20. The paper market said silver was cheap. The physical market said it was scarce. And within 2 years, Silver had rallied to $49. The physical market was right. We're seeing echoes of that dynamic right now, except this time the paper price is already at all-time highs, which means the physical price is even more extreme, and the gap is widening. This is unsustainable. Something has to give. Either the paper price catches up to physical, which means much higher prices, or the physical market breaks away entirely and starts trading at a massive premium. Either way, if you're holding physical silver, you win. Now let's talk about what the smart money is doing. Because while retail investors are buying coins and bars, institutional players are making much bigger moves. There's a mining company in Nevada that just got acquired for a 40% premium. Why? Because the acquirer wanted access to their silver reserves. In the ground, undeveloped silver is suddenly worth a fortune, because everyone knows that in 5 years, silver is going to be far more valuable than it is today. And the mining executives know it too. I've been reading their quarterly earnings calls. The language has changed dramatically in the past 6 months. They're talking about supply constraints. They're talking about the impossibility of bringing new mines online fast enough. They're talking about silver being undervalued relative to its industrial importance. These are people who live and breathe the silver market, and they're bullish in a way I haven't seen in my entire career. But here's the part that should really get your attention. The industrial users of silver are starting to panic. There are electronics manufacturers who are now buying silver futures contracts a year in advance just to secure supply. They're willing to pay today's prices for silver they won't need until 2026. That's how concerned they are about availability. And it's not just electronics. The solar industry is in a full-blown scramble. China, which dominates solar panel manufacturing, has been stockpiling silver. They're buying up every available ounce because they know their entire green energy transition depends on it. And if they can't get silver, their solar industry grinds to a halt. This creates a fascinating dynamic. You have industrial users competing with investors for the same limited supply of silver. And industrial users have to buy. They don't have a choice. If a solar panel manufacturer can't get silver, they can't make panels. So they'll pay whatever price is necessary. This puts a floor under the silver price, a very high floor. Now, let me connect some dots that most analysts are missing. We're in the early stages of the biggest infrastructure build-out in human history. The green energy transition, the electrification of transportation, the expansion of 5G and eventually 6G networks, the growth of AI data centers. All of these mega trends require massive amounts of silver. An electric vehicle uses about 25 to 50 grams of silver. Doesn't sound like much, right? But there are projections for 100 million EVs to be sold annually by 2030. That's 2,500 to 5,000 metric tons of silver, just for EVs, every single year. And that's just one sector. Add in solar, which could require 15,000 metric tons annually by 2030. Add in 5G infrastructure. Add in medical devices. Add in electronics. You're looking at industrial demand that could easily exceed 1 billion ounces per year. And remember, global production is only about 800 million ounces. We're heading into a structural deficit that could last for decades. This is why silver crossing $66 isn't just a price milestone. It's a signal that the market is waking up to this reality. For years, silver was treated as a speculative asset, something that moved on sentiment and technical patterns. But that's changing. Silver is being repriced as a critical strategic resource. And strategic resources don't trade at $20 or $30 per ounce. They trade at prices that reflect their scarcity and importance. Let me give you a historical parallel that's eerily similar. In the 1970s, oil was trading around $3 per barrel. Everyone thought that was normal. Then the oil shocks hit. OPEC embargoes, supply disruptions. Suddenly the world realized that oil was far more valuable than its price suggested. By 1980, oil was at $40 per barrel, a 13x increase in a decade. Silver is in a similar position right now. It's been undervalued for so long that people assume its current price is normal. But when you look at the supply-demand fundamentals, when you look at its industrial importance, when you look at the monetary uncertainty in the world, silver at $66 is still cheap, dramatically cheap. Some analysts are now putting price targets of $100, $150, even $200 per ounce on silver. And these aren't fringe voices. These are serious market strategists at major financial institutions. They're looking at the same data I'm showing you and reaching the same conclusion. Silver is going much higher. But here's what you need to understand about how this plays out. Silver doesn't move in a straight line. It's volatile. There will be pullbacks. There will be days where it drops 5% or 10%. And when that happens, the mainstream media will declare the rally over. They'll say silver has peaked. They'll interview skeptics who claim it's a bubble. Don't listen to them, because every major bull market in history has had violent corrections along the way. Gold in the 1970s had multiple 30% pullbacks on its way from $35 to $850. Bitcoin had countless 50% crashes on its way from $1 to $60,000. Volatility is the price you pay for being in an asset that's repricing higher, and silver is repricing. The 66th level isn't resistance anymore. It's support. The market has accepted that silver belongs at these levels. And now the question is, how much higher does it go? Because once an asset breaks out of a multi-decade range, the upside can be enormous. There's no overhead resistance, no historical levels where sellers are waiting. It's pure price discovery. Think about what this means for anyone who owns silver right now. You're not just holding a metal that's gone up. You're holding an asset that's entering a new paradigm. An asset that the world is realizing it desperately needs. An asset that's in structural shortage, an asset that central banks are accumulating, an asset that's breaking out to all-time highs while most people still don't own any. This is the opportunity. Not when silver is at $200 and everyone's talking about it. Not when it's on the cover of magazines and your neighbor is buying it. Now, when it's just crossed the red line and most people still think it's too late. Because here's the truth that nobody wants to tell you. It's never too late when the fundamentals are this strong. Yes, silver has already doubled this year. But if it's going to $150 or $200, buying at $66 is still early. You're still getting in at a fraction of where this is headed. And the risk-reward is asymmetric. What's the downside? Maybe silver pulls back to $55 or $50. That's a 15-25% correction. Painful, but manageable. What's the upside? If silver goes to $150, that's a 127% gain from here. If it goes to $200, that's a 203% gain. The potential reward far outweighs the risk. But beyond the financial returns, there's something else happening here. Silver is becoming a form of insurance. Insurance against monetary instability. Insurance against inflation. Insurance against a system that's showing cracks everywhere you look. The national debt is exploding. The dollar's reserve status is being challenged. Geopolitical tensions are rising. In this environment, owning hard assets isn't speculation, it's prudence. And silver, more than any other asset, gives you that insurance at an accessible price point. You can start with a few ounces, build a position over time, and know that you're holding something real, something that's been money for 5,000 years, something that can't be printed or debased or inflated away. The red line has been crossed. Silver is in uncharted territory, and what happens next is going to be historic. The supply shortage is real. The industrial demand is accelerating. The monetary uncertainty is intensifying, and the price is finally starting to reflect these realities. This isn't financial advice. I'm not telling you to buy or sell anything, but I am telling you to pay attention. Because what's happening in the silver market right now is a once-in-a-generation event. The kind of move that creates generational wealth for those who recognize it early, and destroys the purchasing power of those who ignore it. The question isn't whether silver is going higher. The fundamentals make that almost certain. The question is, are you positioned for what's coming? Because once silver breaks $100, once it becomes a mainstream story, once everyone realizes what's happening, the opportunity will be gone. The easy gains will be behind us. Right now, you're still early. Silver just crossed $66. It shattered 40 years of resistance. It's entering price discovery mode, and the forces pushing it higher are just getting started. The industrial shortage is worsening. The monetary crisis is deepening. The smart money is accumulating. And the price is telling you everything you need to know. The red line has been crossed. There's no going back. Silver has entered a new era. And if you understand what that means, if you grasp the magnitude of what's unfolding, then you know exactly what you need to do. The window is open, but it won't stay open forever. This is your moment. Don't let it pass you by.